Hey, what's up guys? John here. The White House has just partnered up with the Consumer Financial Protection Bureau to regulate credit card companies essentially out of existence.
One of the key things I've asked the council to tackle are the unfair fees known as junk fees. Those hidden charges that companies sneak into your bill to make you pay more because they can, just simply because they can. These junk fees can add up hundreds of dollars, weighing down family budgets.
What you're going to start to see is credit limits slashed across the board, accounts starting to get closed. You're going to start to see a completely different lending landscape that's now unfolding throughout America. They are talking about reducing credit card company fees 75%.
Consumer Financial Protection Bureau is proposing a new rule to lower credit card late fees.
75%. We have record high credit card defaults, a 24-year high currently.
Credit card debt delinquencies are taking off. New credit card delinquency rates have surpassed their pre-pandemic level.
You have 43.5 million Americans that are going to start paying their student loans October 1st. What are we going to start to see over the next couple of months? We're going to start seeing more defaults across the board. You have consumer spending for shopping, for holidays, for gifts. You're going to start seeing a lot more weight put on these credit cards. And then what's going to happen? More and more defaults. And if credit card companies can't make their fees, they're going to look at who's risky and they're going to start pulling back on credit. And that's what I think is going to happen. We're walking into a massive credit crunch in America. I'm going to break it down for you. I'm going to show you exactly what's going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate the people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Simply click the link in the description below this video to schedule a free strategy session. Take a look at this. So they say that credit card companies, they did $130 billion in business through interest and fees in 2022, right? They go on to say that credit card companies, consumers with revolving balances were charged more interest and fees than they earned in rewards. Well, of course, they're a business. They're in business to make money. They're not going to give more rewards than they're earning. So when you start to look at what's happening right here, and I agree that credit card interest rates are through the roof. I agree. But I also believe that credit cards are a lifeline for a lot of Americans. And when you start to look at this environment we're in right now with these defaults, I mean, look, 60 days, the 60-day car payment delinquencies for people with bad credit hit an all-time high of 6.1% in September, up from 5.8% in August. You're starting to see the trend, according to Fitch ratings. That's the highest level of lateness since 1994. 1994. 90-day delinquencies on credit cards have increased 5.1%, up from 3.4% in the second quarter of last year, Federal Reserve data shows. And then the steady increase of delinquencies for 3 consecutive quarters signals stress on consumers' ability to repay balances on general purpose credit cards. I mean, this is what we're going to start to walk into. So here's what they're saying. So nearly half of Americans need credit cards to cover essential living expenses. Half. And so as the White House, they start to go after this, you just have to imagine what this is going to mean for millions of Americans. They say the survey found that 48% of Americans depend on credit cards to cover essential living expenses. This is more common among younger generations. 59% of millennials use credit cards for living expenses. Conversely, only 29% of boomers rely on credit cards to cover essential expenses. And more Americans face persistent debt as interest rate rises. But look at what they're doing. So they're saying that they need, it's $1 trillion in credit card debt, and they need to go after these card holders. You just have to ask yourself, if you go to a payday lender, you get an installment loan, right? You're obviously going to pay more interest for that. And why? Well, it's because they realize that that type of loan is risky. It's a riskier type of consumer that's going to likely take out that loan. They're going to see higher defaults. They need to charge more interest to offset the risk. And so when you are looking at where consumers are right now, American consumers, they are in a very, very, very risky position. Who's going to go out there and lend money to Americans right now, the everyday American, if they're not going to be able to be compensated for that risk, right? Not many people are going to do it, right? Not many people are going to do it. And so this is what the CFPB is looking at. They want to cut late fees 75%, right? 75%. And this is what the White House is doing. So this came out a few weeks ago, and now they're saying Biden administration announces broad new actions to protect consumers from billions in junk fees. So they're literally talking about going through, it says right here, every minute, every day, Americans engage in close to 400,000 transactions buying and selling goods and services. It is baffling that the administration believes it is going to help consumers by regulating how businesses price all of those transactions. So what they are going to do is they say the FTC is proposing a rule that, if finalized, As proposed, it would ban businesses from charging hidden and misleading fees and require them to show the full price upfront. The rule would also require companies to disclose upfront whether fees are refundable. This would mean no more surprise resort fees at checkouts or unexpected service fees to buy live event tickets. The rule would apply to industries across the economy, including event tickets, hotels, lodging, apartment rentals, car rentals, and more. Under the proposed rule, companies that fail to comply could face monetary penalties and have to provide refunds to customers. And the CFPB to require large banks and credit unions to provide basic information to consumers without charging fees, meaning no more fees for basic services like checking account balances. Who has paid a fee for a checking account balance? You can see your balance on your online app. Right? When you go to the front desk at a local Chase or Wells Fargo and you ask for your balance, they're not charging you a fee for this. You have to really, when they say these things, you really have to wonder: is that really what they're saying, or is there something bigger behind the curtain that they're not telling you? I believe that something much bigger is happening. You're not getting paid. You're not paying a fee for a payoff amount on a loan or getting account information needed for applications. You mean, of course, you get fees if you're applying for an apartment or you're doing something like that, sure, but that's a little bit different. So later this month, CFPB will propose a rule that, if finalized, it would require all financial companies to allow customers to safely, securely, and reliably send their banking transaction data to other companies and banks. The proposal would make it easier for people to break up with their bank, switch to banks with better offerings, and to manage accounts from multiple providers. This reform will ensure financial companies compete based on service quality and upfront pricing, deterring junk fees. The CFPB finds that bounced checks are down more than 86%, right? That's what they're saying. And nearly 2/3 of large companies have eliminated these fees entirely. CFPB studies show that bounced check fees, which would cost $30 to $40 per transaction, hit low income and minority Americans the hardest. This new finding is at $5.5 billion in annual reduction from banking junk fees. When you start to see what's going on here, CFPB is also announcing unsecured $140 million in consumer refunds for companies that charge illegal junk fees as surprise overdraft fees, multiple bounce check fees. The entire banking industry, the entire credit industry is going to be under massive attack over the next, I would call, a couple months. Like, this is really going to continue to ramp up. And there's something else going on right here. This is from Fitch Rating. They say high consumer loan delinquencies in credit card and autos, as seen with the recent buildup of higher lost credit card balances amid the depletion of pandemic stimulus savings for larger regional banks. Higher provisioning is expected with credit card normalization to maintain banks' reserves coverage, which will further weigh on profitability. So there's something new called Basel III Endgame, which is essentially where the government is going to be able to go out there and really regulate a lot of these banks. The banks have a whole different type of standard in which they have to hold deposits, how they can lend money, who they can lend money to. It's a really, really big game changer. That's happening in about 12 months, 11 months. And so they're really ramping up for this right now. It says similar to Reserve, banks with over 100 billion assets on course to build capital buffers above their internal targets in anticipation for higher, longer-term debt regulatory requirements. On October 20th, regulators extended Basel III Endgame proposal comment period 2 months to January 2024. Delaying certainty will affect the impending rules. However, JP Morgan estimates a 30% increase in risk-weighted assets. Bank of America, risk-weighted asset inflation 20%, with Citi estimating a range of 16 to 19%. We expect banks will manage higher capital requirements of Basel III Endgame without much difficulty, but will likely ramp up to reinforce the trend of lower loan growth over the near term. This is what they're moving everyone into. I mean, it's going to get harder to get a loan. There's no doubt about it. It's going to get harder to get a loan. They're going to continue to regulate these companies in a very, very, very big way. And so you have to ask yourself, if you're looking at this from the perspective of a credit card company, a bank, a financial institution, you have to ask yourself, if you were them, who would you want to lend money to? What would you not want to do? What would you want to stay clear of? You'd probably want to lend money to people that are going to pay you back, right? Higher credit score borrowers, people with a longer payment history, people that look like they're going to pay you and it's not going to be much of a headache. The subprime borrowers, the 500 credit scores, the 600 credit scores, the 650 credit scores, you'd probably stay away from them because you look at their credit report, maybe they have a 92%, 93% payment history, meaning that every year you might, every year or two, you might miss a payment, or especially in this environment, probably going to continue to ramp up more. But people with a 800 credit score, 750, you're going to look at them and say, okay, they probably have a history of being financially responsible. They pay on time. This person is probably going to be a safer form of business. That's what I think is going to happen. We're going to start seeing a lot of low credit score borrowers start to get pinched out because of all this chaos that's unfolding here, which is very, very unfortunate, because out of 205 million Americans, the average credit score is a 698. And that number, I believe, the average is going to come down dramatically over the coming 6 months due to the student loans and due to everything that's happening in the economy. You're not going to see credit card usage and issuance increase going forward. We're going to see a lot more of a problem for many, many, many Americans to get access to credit as we start to see these regulations continue to ramp up. What do you think about this entire situation? Do you think we're walking into a situation where credit card companies are going to look at this and say, you know what, forget it. It's not worth it. I mean, right now we're seeing the trend. We're seeing defaults are continuing to rise. We're seeing more and more regulation coming in. We're seeing, they want to basically reduce fees 75% on late payments. So when you think about this, they're lending money, right? They're lending money, and they're not going to be able to make a fee on a late payment. They're going after their interest. What do you think is going to happen? They're going to really, really look at their entire business model differently. So if you are reliant on credit cards, you're using them every single day, my suggestion right now, if you have high interest credit card balances, look at 0% APR balance transfer credit cards. There's a variety of them out there. You have to have an average credit score of a 730 in most cases, but look at these offers. Try to put your high interest credit card debt onto these 0% APR cards and pay them off quickly. You want to put yourself in a position to where you can have access to credit. You're going to want great credit scores, 750, 770, 780. You're going to want multiple credit lines across different providers, maybe Visa, American Express, Discover. You're going to want different banks. You're going to want, the more options you have, the better. And the better your financial health, the better going forward, because we're going to start to see a lot of people get really just cut out entirely from lending and from a lot of these loans. What do you think about it? Drop below, hit the like button. If you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, you want to put yourself into a position to where you can access to more liquidity, more capital for yourself and your business, go to GreatCreditFast.com. That's GreatCreditFast.com. Click the link in the description below. Schedule a free strategy session, and I'll catch you guys in the next video.